All right. Hey, everyone. Welcome to the Financial Summit's second show of the day. This is going to be a deep dive on Bitcoin's technical analysis post-halving, a bit more of a macro picture. Let's welcome Mark Wood to the show. You probably have not seen him much on YouTube. I'm going to go to screen share in a bit to pull up his Twitter handle. Mark, you only have about 350 followers on Twitter. But Mark is an incredible analyst. He has been analyzing charts for over a decade now and posts a lot of stuff in our private group chats on markets. And man, I have no idea where you find the time. Mark will be hosting this show in the near future. He is new to YouTube, so I'm helping him kick it off. It's probably going to be a weekly show focused a little more on macro. I don't know if you do a lot of on-chain analysis or fundamental stuff. You probably do. So maybe there'll be a merged show with another analyst that's more into that kind of stuff. But Mark, I will let you do a brief intro of yourself as I pull up your Twitter handle for people to follow.
Awesome. Yeah, Tone and I have known each other for several years, and I like to operate behind the scenes. Just contributing information to the channel and in a couple of other Bitcoin analyst groups that are phenomenal that hopefully we can get some people on the show from those channels, because there's some amazing traders in that group. And my background is basically coming from the music world. In fact, I've been teaching at the University of Florida, where I grew up in Gainesville, this last school year, and just wrap that up. So I have some time to dig back into the charts and see what's been going on with Bitcoin, even though I keep up with it every day, like 45 times a day.
Yeah, Mark, next time I got to wear my Florida State jersey and you got to wear something with Gators on it. That's going to really cause a stir.
It will cause a stir. And Florida State has kind of been kicking Gators' ass in sports lately.
Yeah, lately I think you guys still have the overall edge across all the sports. And you guys definitely have the educational edge. So we got a while to catch up. All right. Real quick, guys, this is the Financial Summit YouTube channel. The next in-person Financial Summit is in the Maldives. I believe this is during spring break time. So Mark Wood may be able to make it out to the Maldives. We will definitely try. It's somebody you will want to meet at an in-person event one of these days. And you've been to an Unconfiscatable, I believe, at least one. So a lot of you have met him at that event as well. I see your friend Ken is in the audience already saying go Gators, another Gator friend of yours. And I believe I met you through Ken. Okay, so on that note, guys, if you're not following the Financial Summit channel, we're almost at 4,000 subscribers. If you are watching and you're not subscribed, please subscribe. Get us to over 4,000. That's a good start. We've definitely came a long way. So I'm going to do one chart, and then I'm going to hand it off to Mark. Mark will do more of a short-term price analysis and what he's seeing, and then we're going to focus more on the macro picture, and we will also talk about the CPI print that took place this morning. Perhaps we'll talk about that early, as it's clearly affecting all the markets. We will next week, we might do a deep dive on the traditional markets and S&P 500. Please watch our show with Matt McGregor earlier today, where we talked about our view of the short-term chart of Bitcoin, and we are already up quite a bit from this morning's show that only took place 45 minutes ago. So the one chart I wanted to discuss from my end is this one. It's a really cool chart. It has a slightly different look on the macro Bitcoin cycle, as it's a time from the halving cycle. And I have two separate charts. I have one that times the lows, and I have one that times the highs, and they're both a little bit different, because the very first epoch of Bitcoin, the very first cycle, the price didn't come in the moment Bitcoin was launched. The price shows up a little over a year later. And I treat this first epoch differently. When it's time to timing the high, I do use the very first price print that's available to us in order to see how much FOMO takes place before the high is made. While on the other hand, in order to time the low, I actually look at how much time has passed from the moment Bitcoin has launched. So there are differences. I don't have the other chart up. I only have the chart up timing the high, and I have the high coming in between March of next year and potentially as late as October of next year. And based on this chart, I believe that we will break the lows of the last cycle, right? So the low, the ultimate low during this time period was at approximately 175,000, but the more realistic low is the purple line, and that low comes in at just over 200,000. So to me, I would be very disappointed if Bitcoin does not approach that $200,000 area during this bull run over the next year and a half. So this is the only chart I have to share. I'm going to leave that as a teaser. We'll find out what Mark thinks about the macro picture. And Mark, I'm going to come off screen share now. I'm going to hand you the screen share. Maybe pull up your short-term charts. And as you talk about them, mention your favorite technical analysis metrics. I know you use about 15 of them, but what are your top 3 to 5 that you focus on? And maybe we'll do a deep dive on your technical analysis rankings in another show.
Yeah, I learned a lot from Tyler Jenks, and moving averages have kind of become my specialty, I would say. And one thing that is interesting I've discovered through the years is, because I've made a living as a professional musician, I am used to reading all kinds of music. I've played in rock groups, pop groups, classical orchestras, pop orchestras, concert bands, top 40 bands. And so I'm used to jumping back and forth between several genres and reading different styles of music, which I think has led me to be able to just open up a chart and look at how the MAs are situated. I can tell immediately what's going on. So Consensio is something we developed. I've tweaked it a little bit and shared that with Tone. And I've got another simple strategy with just Bollinger Bands and 2 moving averages. That's probably what I use 90% of the time. And I think you can get a very quick look at where the trend is on any time frame with this strategy. We'll take a look at that today for sure. But yeah, it's funny because a lot of people, I hear people all the time talk about moving averages being lagging, and you can't really rely on them. But I have always taken the opposing point of view on that and saying, actually, they can tell you the future. If you know how to read them and if you can tell where they're going, if you're seeing a golden cross coming and the price is very high above it, there's a really good chance we're going to get a correction down into it. And that's stuff, we can cover later on down the road. But yeah, basically moving averages. But you're right. I have 20 different strategies that I've learned how to use, which I'm sure you've seen pop in your channel over and over again, right? So, but they're all simple. I like to try
to. Let's jump into the charts, Mark.
Okay, so the first thing that I will look at is you got am I sharing?
No.
Yeah, great. Where'd you go?
You are not sharing.
Okay.
There you go. Now you're sharing.
Okay, so let me get rid of this. This was a general thing I was looking at right here. I was just looking at this falling channel. I was actually looking for one more drop down into here and maybe even breaking below 58, 59,000.
Right. Now, when you say here, I know personally there are visually impaired friends that are watching the channel. So I
Yeah,
try to always use prices
got
and dates.
yes. So right here, I was looking right around May 15th, right around now into the 20th for the price to drop down to 59,000 one more time and maybe touch the bottom of this channel, but clearly that's not happening. There was a bit of a wedge. I was also watching this on CME, which the wedge was a little bit more clear on CME. And of course, from the CPI reading, we're getting a little bit of a breakout, which is great, you know, because ultimately I had a low coming in sometime around 15th or 20th of May, and then moving on to maybe try to get back to the top of this channel. Still not expecting an all-time high for a while myself, personally. But here, I can remove the drawings and show you the Bollinger Band idea that I'm looking at.
Oh, wow. We crushed the upper Bollinger Band. I had no idea. I don't know. I'm not like you, Mark. I don't go, and people make fun of me with tabs. Look how many tabs Mark has. And he does look at every one of those charts every single day. I'm assuming twice a day. You review them when you wake up, and you review them before you go to bed.
100%, exactly. That's exactly right. But you know, that's how you stay consistent. That's how I've learned to trust my analysis pretty in depth, because I just see these patterns over and over and over again. And so, yeah, you can see this, so we got a little bit of a Bollinger Band squeeze right here.
Right, but it's nothing like the squeeze we had back in late February, early March. It reminds us a little bit of that, but nowhere near to that extent, nor the one back in looks like early February. Those were massive squeezes. This one is it's good, but it's not as good as those. So that's why you're not expecting all-time highs off of this candle.
Right. Well, I've watched your show and I agree with you 100%. This swing high right here of 65.4, 65.5, like if that gets taken out, now we've got a higher low and a higher high, and we've got this 12-hour chart back into an uptrend. So, it could go up here and challenge 67K maybe. I've got a couple of really specific price points that I'm looking at before I fully trust a move up that I think is actually a little bit higher than 65.5. But what I look for, if I go onto a weekly chart, what I look for general trend on any time frame is the orange moving average. I love Fibonacci numbers. Everything I do is 80% based off of Fibonacci numbers. So the moving averages that I track are very often part of the Fibonacci sequence. Orange is 8 EMA, yellow is 21 EMA, and I changed my Bollinger Band settings to 18, and I got that from Peter Brandt, believe it or not. I saw him post a tweet on Twitter a couple of years ago talking about the 18 simple moving average. And it's a very, very subtle difference between 18 and 20. I look at both, but I think the traditional markets in crypto like the 18 a little bit more than the 20. So what I look for is like right here, when we got off of these lows of 25K, and the price jumped back above the middle Bollinger Band, and we got the orange crossed above it and then the yellow cross above it. Now you can see we're back on a strong uptrend, and they're climbing up the Bollinger Bands. Every time you get a close up the Bollinger Band on the top of it, you're looking for new highs. This doesn't always play out, but it's pretty good. And now you can see right here, when this yellow dropped here, I started looking for a correction. I thought the price could even go down further. This was a front run bottom right here at 38.7. I was looking for more like 37.8, but that week closed. We never lost a close. The other thing that's important to me is closes. That's something I learned from Tyler Jenks as well, is you have to wait for the close. And this candle closed right back above the 8 EMA, and off we went. Trend stays good. So now I started seeing the yellow moving average drop a little bit here. And then once again, I started looking for a correction. In fact, on your halving show, I'm pretty sure the price was around 65, 67. And I showed about 10 different things calling for 56K. I was 80% confident that the price was going to be at 56K sometime in the next few weeks. And sure enough, bounced right down perfectly to the 21 EMA. And now what I'm looking for is 3 closes back above 63.8 weekly specifically. That will have me looking at new all-time highs. However, until this yellow moving average trends back above the Bollinger Band, we're always subject to having the price turn back around and come back and test it again. So this is the most simple thing that I take a look at every single day, first thing, all time frames. It works on all time frames. It doesn't matter. You have any questions, Tone?
Can you hear me?
Yep.
Okay, because my computer is like totally frozen and Zoom is the only thing that's working at the moment. No question, just a comment. I forgot to say earlier, Mark is also the man that got me convinced that it's the 4-day chart on Bitcoin that is the optimal use case for Consensio and for longer term portfolio allocation. Now, I did adjust Tyler Jenks's moving averages only because I like using my custom moving average that gives me projections. So I couldn't use the 2-period and the 7-period. So that's why I'm using 3 and 9 instead of 2, 7, and 30. I gotta use 3 and 9 because 3 and 7 we're going to be too close to each other. But yeah, so Mark's also responsible for that.
Yeah, I consider 4-day, and actually I look at 5-day. I basically look at a combination of 4-day and 5-day as the Bitcoin weekly, because Tyler Jenks would look at the weekly all the time, and as I learned more and more about his method, I just felt the weekly was too slow for Bitcoin. It trades 24/7, and we're waiting for signals based on weekly closes. But you can have 2 4-day candles pass in that time if one ends right at the beginning of the week. And so I back tested Consensio. I tweaked the MAs myself a little bit. I use it slightly different from yours, Tone, but it's the same idea. And in fact, 5-day is what I've been watching the closest lately, because we're getting right into, I'll throw one more moving average on. This is a 10 simple. A 3 simple, which I learned from Tyler. That's one of the things I picked up from him. So we need to see, of course, here. So right here, as the price was sitting at 70,000, I was starting to get skeptical. And I kept saying, we're going down, it's going down, it's going down, it's going down. And as you can see, we dropped, tested, bounced. This moving average was resistance at 67.6, and then tested the yellow 21 as it dropped below. And now we're getting a little bit of a Bollinger Band squeeze here. So what I'm looking for specifically on this time frame is about 2 or 3 candles. That's 10 or 15 days, 2 weeks, let's just say, closed back above 64.8. Let's just make it a 65K. At that point, I will feel confident that the lows are in, and we're going to try for a new all-time high, which is these Bollinger Bands are sitting right at the prior all-time high. And this information on 5-day is a little bit different from 4-day. So this is why I like to go back and forth between the two. I kind of average the information between the 2 time frames.
All right, Mark, let's move on to the next chart. We do want to keep the show to under an hour, and we have a lot to cover. So what else you got for us on, take a couple of more charts if you want on the current price and where you see us heading, and then we're going to go with a more macro analysis.
So let's take a look at Consensio on 4-day. So now the moving averages that I use here, I added 2 moving averages. I kept the 8 EMA, which is the orange, and I kept the 21 EMA because I never liked, we would get this space between these moving averages and the long-term moving averages, and there would be so much space in between there. And I figured there has to be something that to look for to catch the price, which I found the 21 EMA to work really well. So now, sorry, here's where I prefer the 5-day currently. Being said, 4-day is closing today, and we're going to get a close back above this intermediate moving average. I believe my averages are 3, 10, and 30. Let me double check that. 3, 10, 30. Yes. And what do you use, Tone?
I use 3, 9, and 30.
Okay, so we're close.
Same thing. Yeah.
9 works great too. So this is the 10. The blue is the 10. We're getting the candle close today. If it closes back above 63.8, well, if we look back here, that was the sign that the low was in on this drop to 38K. So this is looking like a super strong close, but I'm watching the 5-day too because it's a little bit more conservative. That wants a close above 64.9. And we're right there right now. So Consensio is showing us, hey, if you're wanting to get if you took some money out and you didn't buy the dip, you might want to consider coming back in. I would still wait until this swing high of 65.5 gets taken out to consider adding long term. Almost everything I'm talking about is a long-term strategy, not day trading right now.
All right, let's move on.
All right. So I don't know if there's anything else really to talk about as far as what's happening today. It's bullish. So I would like to bop into just looking into the halving, unless you have something specific you want to address.
Well, just in general, right? Like what I usually ask people, you've seen a lot of my shows. So this move today,
Yeah.
we do need to close. We do need to close above 65,000 today or tomorrow. Doesn't matter. But for me, if we close above 65,000 today or tomorrow, I would be very confident that the 56,000 low is here to stay. Even the $60,000 area is here to stay. I would be fairly confident that we're trending up and the all-time highs are going to be broken in the near future. Like I'm good for 100% long position, and if we go below 60, I would be incredibly surprised. Like my confidence with a couple of closes above 65, and my confidence that we're going below 60 drops to like 20%, that we're going to go back below 60. I think this candle, while it's not significant yet because it still needs the rest of the week to stay here, but if we can keep this candle that people are seeing on your screen, we're already above 65. If we can hold 65,000 going into Monday, I think we're off. I think it is a rocket ship taking off slowly, but taking off.
So we could see a squeeze. We could see a short squeeze if this wick gets taken out. This candle could could go crazy. So yeah, so what I would look for right now is if one of the rules with the Bollinger Bands are if you get a close above the top band, which is 64.4 today on the 12-hour, then I would be looking for higher and maybe to take out the 65.5 on the next 12-hour candle. But Tone, I could debate you a little bit on the idea of all-time highs, and I will show you why. I do not like this 2-month candle at all. And
Well, I don't like it either because it's an MRI top.
Exactly. And so, one of the things I've discovered through the years watching candle structure is when you have a shooting star like this or dragonfly, what do you call this? A gravestone doji. Um,
Yes.
so I call what's happening right now exploring the wick, right? I still think that we could get as high as 70,000 up to this top Bollinger Band and still reject and come back down and test this moving average. There is one pattern that I have found that is 100% throughout history, which is any 2-month candle that closes red tests this orange moving average, and we've never had an instance where that hasn't happened. We closed red here, test it, and that was it. Even this candle right here went down. This is 2016. I think we're similar to what's happening in 2016. I think we're that early because look at this signal we're about to get. This is one of the most bullish signals I look for is the yellow moving average, 21 EMA crossing back above the 18. That is going to happen at 38,000, maybe on this next candle close. So I'm bullish. Like, I think this is going to get obliterated over time. However, at the 20K top, got a red candle close, and it was basically the market top. Red candle close led to testing the orange moving average. COVID drop, off we went. 65K, tested the orange. So this would be the literal first time in history that we've printed a red candle, topping candle that didn't at minimum come back down and touch this moving average.
What?
Being
What?
said,
I'm sorry. Sorry. What is the orange moving average? What's the
8
number
EMA,
on
8 EMA on
ATMA?
8
Okay.
EMA on.
Well, it's possible, I guess, to touch it if we consolidate, but that's going to take like 5 months.
Yeah, that's
No,
that's
more
why.
than that. No, no, these are 2-month candles. That's going to take the rest of the year.
Yep, that's why. Look, I'm willing to be wrong, and I always know when I'm going to be wrong, but I'm kind of thinking the price could trend sideways in July due to cycle timing. We could maybe see a dip in July and then move off.
Right. Now,
However,
I will say, Marco, I will say I use the term all-time high very loosely here, right? For me, if Bitcoin is consolidating at 70,000, 71,000, that's all-time high territory to me, right? Like I don't need a print of whatever I don't even remember what the all-time high was, right? I'm guessing like 74,000 or something. Like I don't
yes,
need $74,629.23, right? Like for me, anything in that $71,000 area is all-time high land. And I think we can consolidate between, say, 68,000 and 71,000 for months until these moving averages catch up, and then we go higher.
yeah, I agree. And we could correct through time and not price. But look here. So this is a little bit of a cheat code. This
Right.
is
Sorry,
short.
something similar to what happened in 2016. If you go back to early 2016, right? And the no, early 2016. Early 2016. Nope, that's 2015. Right there. Those two candles,
Yeah,
right? Now, those two candles happen to touch the orange line, but
yeah,
the only reason they touch the orange line is because the prior two candles were not that massive, right? We're dealing with prior 3 candles of the same size. And I think that we could have that 4-month consolidation. This is a 2-month candle chart. So those two candles are 4 months in time. So I can see 2 more of those candles coming in, but keeping us above the orange on the downswings because of the 3 big candles that preceded it.
yeah. I could agree with that. And look here. This is a Fibonacci moving average. This is a 3 EMA, which is my short term. Like I only use that when things are super bullish. And what this is telling us is that even though we had this really nasty candle, we're still watching the price trend above 60K. I mean, it dipped down into it, but if this candle closes above 60K. We still have a month and a half. Well, we could trend sideways. And basically, the simpler way to put it is, as long as the price is closing monthly candles above 60K, this idea is void, going down to 50K. So it'll be interesting to see where the month is closing. And here we can see the month, the current monthly candle. We only had one close. I need 2 closes minimum below this candle to look at fully testing this. And now we're back above it, but let's see where the month closed. The month has to close above 62.9 basically. So, you know, we're 2 weeks away from that. Let's see if we can get a close back above this, because if we look back here, this candle closed back above it, off we went. We had this candle close below it in October 2020 at 11K, closed back above, and off we went. So I would consider a close above 63,000 this month to be fairly bullish, and it would keep the TD count moving.
Gotcha. All right, so let's move on to the cycle analysis, and maybe we'll cover the CPI at the end of the show.
Okay, so this is my main halvings breakdown chart, and I'm amazed.
By the way, Mark, if you're not using the side panel with the assets, maybe you want to close that. Just the upper the blue box. Oh, down.
No,
nope, not there. Sorry. You want to push it's like the upper, it's like above the clock. You see like the clock, and then right above that there's like a blue box. Up and to the right in the corner. Yep, that one. Yeah.
That's it.
Yep.
Okay.
And this way it makes your chart full screen.
Gotcha. All right. So what I was saying is that I'm amazed at after so many years, a decade and a half now, that some of these patterns just continue to repeat, and they have to break. I mean, all patterns are meant to be broken, but I always love the phrase, it works until it doesn't work. You know, so resistance is going to be resistance until it's not. Support's going to be support until it's not. So here are the main things that I've noticed. I've got several timings that are all similar. I've got the halvings marked by the green verticals with the dates. And then I've got a couple of different timings that we can look at. But notice this, every single parabolic top has had this massive downtrend. I'm on a 2-week chart right now. And then we get a bump and run right here. We get a breakout, a retest. This was a perfect bear trap. And then off we go, halving parabolic. Same thing off of the 20K top. There was the 6K breakdown to 3K, breakout. Here we go, COVID, halving, parabolic. Same thing right here. You know, these trend lines are years long, and then once these trend lines are formed, I draw them and I just wait. And we can see here on this last breakout, it was another bump and run right here. It was a breakout, sideways, test, launch. Right there. That was one of the best buys. That was right at $20,000. That was a
I talk about that one all the time.
There's so many things saying buy, but it was scary. That was a scary buy. All right, so now what I have going on here is the green shaded areas are the moves made after the halving, basically after the halving, getting back to the highs of the halving, pre-halving. And of course, this is a great thing that shows diminishing returns. It's a really clear look at it. So we had an 8,300% move to 1,200 in November 13. Then we had the halving in July 2016, sideways, which we'll talk about in a second. And up to the top was a 2,800% move. Then we had the halving in 2020. The price was at around 10,000 at the halving, sideways, and then 65K, 69K, there was a 600% move. So this gets us to my conservative projection to where I think a high might be. And there's a couple of other factors that I put into this based on Fibonacci extensions that are not on this chart. But from a timing standpoint, I have a very conservative top target of around 155, 160K in September-ish. But I agree with you that the top could come as early as March. I do think it's going to be a little bit earlier this cycle than November, December, but let's just say fall, Q4 2025. So here's my conservative target. It sticks with diminishing returns. I've kind of cut the last run into a quarter-ish, something like that. We get a nice 125% move off of here. In order to break diminishing returns, we need to see the price above 225 or 250,000 in order to break that pattern. So this is super subjective with a little bit of technical analysis. And I like to keep things conservative. Okay. I agree with you 100%. I'm seeing signs that make me believe the price is going to 200,000 and higher. So now the next thing we have is from the halving to the lows, which in 2012 to 2015, that timed 777 days to the bear market low. Go to the next halving, the 3,000 low in December 18 was 882 days. Halving 2020 to the bear market low was 924 days. So this is an interesting pattern extending the amount of time. We had 770, 880, 924. So I'm estimating a bottom to come in October 26th if the cycles remain. That is based off of extending the bear markets a little bit, but there are some other things that also bring the bottom to this point as well. Up here is from the halving to the high, to the market high. 2013 was 370 days. July 2016 halving to the top of 20K was 520 days. Halving in 2020 to the top was 532 days. So this also brings me another top timing of around 500 days from the halving into September 2025. This one was a little bit short. These two averaged out to be about 520 days-ish or something like that. And then let me see. The last thing I have is bear market lows to bear market to the tops. So, or no, sorry, tops to tops. 2013 top to the 2017 top was, let's just call it 1,500 days, 1,484. And then the 20K top to the 69K top was also 1,435 days within 50 days. So if I time that out to around 450, 460 days, that also gets us to a top timing around September, October of 2025. So am I confident in that? No. But if the pattern stays, then that's what we're looking at again. We're looking at a market top in 2025. What do you think of that, Tone?
Yeah, no, the timing aligns a little too perfectly, right? So
Yeah.
it makes me think, are we going to undershoot everything or are we going to overshoot everything? And here's why we want to be conservative. But here's why I'm leaning to the overshoot side of the equation, is because we undershot in the last cycle. And the reason why we undershot in the last cycle is because of the tricky double top scenario. Now, had we actually topped back in April and created that trend line, making a low, I mean, that top would have come a little bit early, but price-wise, that top was good enough. We topped at 64,000 back in April of 21. It was good enough for a top. And had we continued going down from there, we probably would have bottomed out earlier than December of 2022, basically. And we would have started this cycle up a little bit earlier as well. But because of that double top, and while the first top was just barely high enough in the price, the second double top was not high enough in the price at all. And it should have gone into the 80s.
Yeah, I agree. I think
So
I think a lot of us were looking at around 85,000. That was a really strong
I
technical
was,
area. Yeah. It was
right?
high probability too. It was not like pie in the sky. That was a high probability move. So this was just distribution. If you really analyze this,
Right. And this was, right. And that drop, that 50% drop, was caused by the Chinese mining ban. And that slowed down the momentum. So we should have had something that's looking similar to 2017 with a single top in between the two peaks and probably closer to the second peak, somewhere in the 85 to maybe even 125 range. We should have, like if you combine those two peaks into one single peak, it should have topped us in the low 100 range, somewhere between 110 and like 125, creating a nice cycle to it all, timing it both price-wise, time-wise, price-wise, and then creating a proper bear market that would have bottomed out also in, say, November, December, but it would have started from a higher level, probably would have ended at a higher level slightly, wouldn't have gotten past the 2017 high of 20,000. Had we gone to, say, 125 in 2021, we would have probably only fallen to 25,000, maybe 30,000. It would have maybe even only to 40,000. So I kind of envisioned that there were issues in the last cycle. And because the last cycle underperformed, this cycle could overperform because the last cycle underperformed. I would say that the 2017 cycle slightly overperformed. Honestly, I don't know, you remember me in those days. I was calling for a top in the $7,500 range to be the ultimate high. We ended up going to 20,000. Now you can say, oh, Tone was so wrong. He was calling for a top at 7.5. We hit 20. But I was only wrong by 3 weeks. There are two things to call on a top. There is price and there is time. I missed the top by 3 weeks. It just so happens that it almost tripled in those final couple of candles. But, and I did become bullish once we broke above 8,500. And I kind of like threw out the towel in the opposite direction. I'm like, well, now we're going parabolic. I have no idea when we're going to, at what price we're going to top. But from a time perspective, we're already there.
right. And then Tyler Jenks saw the parabolic top and then the drop and then the lower high. And he's like,
As the
oh,
hyperwave.
and that, and then as all of us were like, oh my God, this thing has got to go to 100,000 tomorrow. He's just sitting there so casually saying, nope, pretty sure this move is done for a while.
Right. And on the flip side, as we were going down, because we ended up overshooting to the upside back in 2017, we ended up we ended up higher on the downside than we should have. Now, a lot of times when something overshoots to the upside, it tends to overcorrect to the downside if it happens quickly. Now, again, if you move your cursor back to April of 2013, all the way back. Nope, further back. Yep, right there, right? We went up so fast from $10 to $250. We corrected down to $50 within 2 weeks.
Yeah.
We went from 250 down to 50 within a 2-week span. Okay, so that's an example of a massive overcorrection to the downside because of an overcorrection to the upside. The overcorrection that we had to the upside in 2017 did not bring us all the way down to the $1,500 mark that Tyler Jenks and I were anticipating. And I think the reason why it didn't happen is because it took a lot of time to get there. That 6-month consolidation on the bottom side of the triangle
Right here.
extended for so long that it allowed for the bottom to take place at 3K. And also, since the halving already took place, and this is something I kind of realized hindsight, is that because so much time has taken place, the miner profitability chart did perfectly bottom out at the prior swing high. But because of the halving, it didn't need to go down as low as the prior swing high. Now, because the last cycle, the 2020 to 2024 cycle, underperformed price-wise, it was able to undershoot the prior swing high without it being as, as much of a percent correction from the all-time high as we had from like 19,000 to 20,000 to 3,000 was actually a bigger percent than 68,000 down to 17.
So, look at this. Look, is this not one of the most perfect descending triangles ever printed right here?
It was. That's why Doug Polk lost a very crucial public bet.
So, so a couple of things, Tone, and we can get off of this. I think that this current cycle is kind of a combination of this, we kind of a double top scenario. And I believe from a structural standpoint, we're somewhere in here, 2016, 2017, super early in the run. I'm still very bullish for an extended term. But the reason I say this is because clearly one of the things that we all know is that we've never hit a new all-time high prior to the halving. That was a first. Normally we're not at a new all-time high until the November after the halving. And so consolidating even into the fall would not be out of the ordinary. A couple of other things I've noticed about the halvings is within about 40 days post halving, the lows are in. We're not quite out of that window, but it's never taken more than about 40 days to find a new low after the halving. And then the other thing that people might not be aware of, because we all know that the price goes bullish and it looks bullish, but if you actually break these periods right after the halving, right here and here and here, these are 60 to 90-day timings that before we're really back into another bullish trend. And so we're still fresh off of this halving, staying sideways for another 2 months. I see it as just falling right in the old patterns. It might even take longer to consolidate and deal with this all-time high run up, or after 40 or 50 days, we could already be at new all-time highs and trying to break this pattern of diminishing returns.
Yeah, no, I don't have anything more to add on this chart. If you have one more, we can cover one more.
I think so. There's one thing interesting on this one. This is also broken down in the halvings. So here's my bullish case agreeing with you. This is not any kind of this is just a best fit curve. This isn't anything calculated or programmed. But if the price continues to drift up towards the top of this curve, getting into the timing of the top around September, then we're looking at 210,000. And if I put a Fibonacci on there, I think there's a fib. Yeah, right here. Oh, actually, closer. Okay, so this might be hard to see. Right here is perfect. 3.618. Here, I'll zoom in. I'll expand it. So I drew a fib from the 69K to the 15K bottom, and we've got this one Fibonacci extension way up here. 3.618, 3.414. That times right to the top of that curve. So that is where the price would have to even begin to get to break prior cycle diminishing returns. Because I believe the last cycle also topped at the 3.618. I'm pretty sure that's the case. Let me see. 2.618. So that would do it. Right here.
No, wait, no, that you have an incorrect. Yeah, you got to lower that.
Oh, sorry. You're right.
You have to lower it further.
There it is. So it's right at the 3.68. I thought
you have to lower it further. It will be at 3 point. Yeah, you gotta lower it further still. You gotta go lower that to the top of your green thing. Yep,
There it
right
is.
there. That's it.
All right. And then if I extended a horizontal ray across there,
Yep, you got it. 3.618.
3.618. So did that show up? Did that ray show up?
It didn't, but
yeah, you got it.
yeah. It did show up. It's just light green. Yeah.
There it is.
Right there.
Okay. So we have to get above 210,000 to break diminishing returns, as the way I see it. You know, that can be debated what actually breaks diminishing returns. But I thought that was interesting. This is an interesting bullish look that goes beyond my conservative 150K. And then another thing from a timing standpoint, something that's really interesting is this is what I consider the death cross on a weekly time frame. It's the 21 moving average crossing below the 55 moving average. Every single market that's happened, it's cooked. It's done. And in opposite, the golden cross is when the 21 crosses back above the 55. That's called the market lows every time.
Is 55 a Fibonacci number? I don't think so, right?
Yeah.
Or it is. It is.
Yeah.
Oh wow. Okay, I know 21 is, but okay, cool. Yeah,
So,
you do love your Fibonacci numbers and moving averages.
Okay, so check this out. From the death cross to the bottom. Now we could argue that this was the bottom, but I've timed the bottom from here, but really this was kind of like a secondary bottom. That was 308 days. If I go back to here, it's pretty short.
By the way, you're using Bitstamp charts.
Yeah.
I like to use the index charts, either the BLX index or the TradingView index, and those wicks are almost identical on an index. Because Bitstamp was the January was way lower on Bitstamp than the August one. On Bitfinex, which was the other big exchange at the time, it was in reverse. That's the one that tanked in August, and the January wasn't as bad. So it evens out on an index.
Right. I definitely have checked those out. And the moving averages might even read better from the index because it might go back a little bit farther. But I have so much stuff on Bitstamp. So
I know it took me a while to migrate everything over to the index.
The basic gist is we could potentially look for a top. Let's just call it around 520, 530 days after the halving, which lines up pretty close with the last two halvings. This one was short.
Sorry, Mark. One more thing, just to make the chart bigger. So same thing. Can you drop the thing on the right?
What do you want me to do?
Drop the assets on the right side to make the chart bigger.
Sorry.
Yep.
There you go.
Thanks.
Yeah. So, and then here's our 1 million. I've got a 1 million timing for 2034. A lot of people say 2030. I'm conservative. I'm going to say after the 2034. Let's see. Up here, way out here somewhere. Yeah, right here. Just keep wandering up. And there you go.
So you're saying not next cycle, but the cycle after that.
Yeah. I think next cycle is too soon. That's got to be $20 trillion into the market cap. That's,
I don't know. I think it's next cycle.
you think 20 trillion is in next cycle?
Yeah, well, I think I think US dollar collapses by 2034, right? Like, you know, my views on the US dollar. Well, again, right? It's Bitcoin won't even be Bitcoin will not even be measured in US dollars by 2034. So I'm looking at after the 2028 halving, that halving cycle, Bitcoin is no longer measured in US dollars. Now it's going to happen on the back end of that, but somewhere around between 2029 and 2032, somewhere in that zone, Bitcoin is not being measured in dollars anymore. It's being measured in Lambos. So I think Bitcoin being over $1 million of today's money is more than reasonable because you're not going to be measuring it in dollars, right? So that's kind of my, I think we're crossing that $1 million worth of wealth today in today's dollars before 2034.
Yeah, you know, and we could have this conversation later because it gets pretty in depth, but I believe I've been talking with my friend Ken. We talk about this stuff every day, and I believe Japan has been a test net for the US to see how much money can be printed before everything absolutely breaks. And what Japan is showing us is that you can continue to print a lot more. And the more that gets printed, of course, it's going to eventually land in the market cap of Bitcoin as well. So, you know, to get to 20 trillion market cap, it's not unreasonable to do it in under a decade, for sure.
Personally, I think it's a bad it's a bad comparison
Why is that?
because the Japanese people are a lot more honorable than most of the world, especially, you know, a melting pot and an immigrant society like the United States, versus a completely homogeneous society where even like kids that are half Japanese are not considered Japanese. So I think the mentality of the people is very, very different. And I don't think the US can do what Japan's doing.
I actually 100% agree with you, Tone. In fact, that's what we were talking about yesterday. You know, I said Japan actually prints the money and it goes into infrastructure and it goes into education and it betters the society and it keeps up with technology. The US just creates a Cantillon effect of just drifting the money higher and higher and higher to the top. So I agree with you. I 100% on that. But, you know, we saw how much money was printed in 2020, and that's another thing that has kept me really bullish is we've reached an all-time high prior to the halving. Is of course the ETFs were a part of that, but that was done with trillions of dollars still sitting on the sidelines that are in money markets and treasuries that have not even been released into the wild yet. And there was so much money printed in 2020. I think most people are completely unaware of how epic that was. And so, you know, to get to 150K, we just need 3 trillion market cap. That's where Apple is. That's where Microsoft is. I don't think that is out of the box at all.
All right, Mark, we do have to wrap up. Do we want to close out with a few comments on the CPI? Unfortunately, I can't take screen share from you. My computer is completely frozen. I'm actually not even sure how I would end the stream. That's a later problem in about 5 minutes. But if you wanted to pull up the report, or what I like to do is I like to go to the Fred website. I don't know if you want to do a quick Google search if you have Fred open. If you go Fred Consumer Price Index, Fred Consumer Price Index, and pull up that chart from the St. Louis Fed. And now what you want to do is you want to click on that Consumer Price Index, all urban consumers. Yep, a little lower, a little lower. A little lower. Yep, that one. Nope, too low.
Right there?
Yep, click on that. And now you want to go to Edit Graph. the red bar, the red thing at the upper right. Yep. And now you want to select a different chart. So in units, click on the drop down in units and click on percent change from year ago, but not, yeah, that one. Exactly. And now you can zoom in by moving the bar below the chart. There is this little bar thing. If you,
Right here?
you can, nope, but in the from the opposite direction. And bring that into like, I don't know, since go to like 2010 or something, or 2011. Yep, right there. Yep. And now everyone is going crazy over the last print. So now if you put your cursor on what happened today, all the way on the right, and you will see all the way on the right. One more tick. Yep, right there. That is today's print. It's coming in at 3.4 rounded up. That is today's print. Everyone is, you know, out there cheering as if we solved all the world's problems because we're lower than the prior tick. And if you click on the prior tick, if you move it, yep, right there, that was the prior tick. And apparently, like oh, I think you're muted, Mark. I didn't hear anything.
I didn't say anything.
Okay. And so when I saw in the morning's video that it came in at 3.4, I'm like, oh shit, that's kind of high. And for some reason, I thought that 3.4 was actually a higher print than last month's print. But apparently, because I was thinking of the print before, if you move one more to the left, right, you see 3.0, and the print before was 3.0. So for some reason, I thought that last month's print was the 3.0 print when you round, or 3.2, sorry, 3.2, and now we're 3.4, and I'm like, oh, inflation is up. But apparently inflation is down by the smallest amounts, and somehow people think that that's going to produce 2 rate cuts by the Fed later this year. And I couldn't help but laugh after I got off my stream this morning of how silly people are. Hey, the markets are rallying, thinking that the Fed's going to lower rates. This means absolutely nothing. I don't think the Fed is going to lower rates. And even if the inflation rate was high today, I still think the market would have gone up. The initial reaction would have been to the downside that the Fed is not raising rates, but versus the initial reaction being up. But ultimately, high inflation leads to higher asset prices. Whether the Fed lowers the rate or not, it doesn't matter. So all of these high inflation ticks, and for me, anything above 3% is high. Anything above 3% will cause the risky assets to keep rising. You can see when risky assets started to rise. If you move your cursor to, say, January 2021, the moment we broke above that 2.5% area, that's when everything started to really go up. Because yes, the markets started to rise in 2020, but they were still recovering from the crash. But the all-time highs, whether it's Bitcoin, whether it's stocks, started to be made in 2021 because inflation was breaking 3%, and inflation is still breaking 3%. So therefore, asset prices will continue to inflate.
Well, you know what's funny is part of the reason, and maybe the only reason that this read was lower than last month is because they took coffee out. I don't know if you saw that, but coffee, the price of coffee has actually...
Did they? No, I did not see that.
Yes. So they took that out because it's gone up, and that gave a lower reading, which is interesting because it must mean, well, look, all these numbers are manipulated, and it's funny because we're talking about price, you know, being down 3.3%, but that is after literally the prices of everything doubling, after 100% inflation, you know, not 8%. The prices of a lot of daily life things here are at least 50% higher, if not more. But I'm just wondering, by manipulating this and keeping it like it is, it kind of tells me that the Federal Reserve was ready to have the stock market move again, which is interesting because this is one thing I was watching. You know, I put in your channel a couple of days ago. I drew this eyeball right here, because this is a Fibonacci taken from the high at 52.60 down to the drop a nice little correction of 49.59, and the 0.886. That it seems automatic that once you've bounced this high, you're already going to be at all-time highs. However,
Agreed.
this Fibonacci, well, basically, once you clear the 618, you're very high probability you're going to see new all-time highs. However, the Dow hit this 886 and got knocked down for about 4 months before it came back up and finally printed a new all-time high. And as you can see, we had the day's pause. I can move that right at the eyeball. And this was, so the Fed could have figured out a way to get us a little bit longer correction, but it seems like they're wanting to go up. Now, here's the good thing. The S&P printed a new all-time high today. So
I know, it's crazy. And what a move on the S&P. And as you know, I've been bullish on the S&P forever. My entire public career for over a decade now has been nothing but bullish the S&P, contrary to the gloom and doomers. But hey, Mark, let's do a traditional market deep dive next week.
Yep.
So we'll save it for next week, and I'm still expecting us to be at new all-time highs.
Awesome. Are you're expecting that with Bitcoin?
Next week, new all-time highs? Probably not, but I do think next week will be higher than right now.
I think you might be right about that.
All right, and on this note, Mark, you want to end your screen share, and maybe I'll get control of my laptop back without screen share. And I'm gonna try to end this stream, but it looks like nothing on my laptop is functioning. So I may just have to, hold the turn off button to shut it down, and eventually this will end. So, yeah, I'm not, because I can't even open my, control panel to kind of end the program. So I'm not exactly sure how I'm going to shut this down. But Mark, thanks for joining the Financial Summit Network. This was going to be pretty much your show. You'll be able to pick your guests. I'll stay on here for, we'll see, for a few months, see how it goes. And after that, we'll see where the show goes.
Awesome. Yeah, thanks, Tony. It was so much fun. You and I chat behind the scenes all the time. It's fun to get on the screen with you. And
on my channel, since my channel is no longer markets, we got to come on and do a deep dive into tequila and bourbons and whiskeys.
Oh yeah.
Mark is a bit of an expert at the latter two. He learned from me on the tequila, and I'm learning from him on the bourbons and whiskeys.
It's a perfect combo. We got all the bases covered.
All right, Mark. Thanks for joining. I'll see you at Unconfiscatable, and hopefully at the Financial Summit in person as well.
All right. Later, Tone.
Later, Mark. All right. Now, how the hell do I turn this off? All right, guys. I can't end the stream. So I'm going to just shut down my entire laptop, and hopefully it turns off. We'll see.